Welcome back to the Eric Krown crypto channel, and a bit of a different day today as I wanted to give some insight as to what to expect in the quant program while it is still on sale for the next couple days here, and then also give you a template as to how I actually create backtests and then put to work an actual strategy. You can steal this as much as you like. I would strongly suggest that you do backtest it yourself just so that you can, have the actual results in front of your face. I'll show you the results that I have. I've already backtested 50 iterations with this particular setup, and actually another prior 50 before that, but we'll do some on screen here too, as much as time allows for. And then of course, I felt the need to do this, not just give insight into the quant program and what to expect there if you're interested in such things, because, for some people, they're going to like to trade like this, and some people are not going to like to trade like this, but also because I do have affiliate links to both ByBit and Apex Pro, which is like a decentralized exchange. I need it for my moral conscience, can't just be giving out affiliate links and throwing people out to the wolves, of course. So I wanted to give a template as to a strategy that I actually use that I find a lot of value in. And again, you're free to steal this for yourself. One big stipulation here before we get into it, however, we're going to be focusing on the 5-minute time frame. So the 5-minute time frame for this particular strategy gets setups a lot, basically. I just got done backtesting the last 50 iterations yesterday, and there was 50 within 12 days. And I consider this price action very slow to begin with. This strategy is reliant on such things, which does mean that there will be naturally smaller P&Ls, naturally smaller profits and losses, because you're simply just getting a ton of iterations in a short amount of time. So that does mean that fees can be an issue. With fees being an issue, this is one of the reasons why I actually do like ByBit, because ByBit is offering 0% on maker fees with my link in the description below. They also got like a $30,000 deposit bonus, however the hell that works. And then Apex Pro also is comparatively low fees, especially in terms of DEXs. In fact, I believe if you stake their thing or whatever the hell, you can even get it to zero or close to zero in terms of fees, which is going to be a humongous help, especially when being more active in these cases. Now, you could scale this up to other time frames. That's, again, your prerogative, but do understand that the results will be different. Not all that much different, I would guess, but something to also consider and perhaps backtest. Again, this is not financial advice, just sharing something that has actually been quite kind to me. All right, sweet. So we're going to start it off here with the trade strategy and checklist. This is how all the strategies start in the quant program. First things first, what do we focus on? We're focused on the 5-minute time frame, and we're going to be using for the main sources of edge, the 5-minute Joule or Joule Light. This is the one thing in this whole video demonstration that is not free. It's not free. It's on the Krown trading application. It's $30 a month for the Joule Light, and for the sale, premium's actually free. Although we don't include the Joule Light with that just yet. In the future, probably yes. All right, PMARP. Again, free indicator, and then the Lux algo, which is going to define range highs for us. Anyways, what defines a risk management parameter? Ideally, we want to see a closure above the range highs. There is an emergency condition as well with a wick above the prior trend highs. This has not happened once in testing for this strategy on this time frame, or for most, to be quite frank. But we need to have these sort of things in there, because if they do get hit, maybe during a black swan or something, we're going to be pretty damn glad that it did. To stop the bleeding or the gushing of blood. Anyways, how will positions be entered? So we need to see the Joule Light do this. We need to see it above 67 but below 78. So it needs to be between 67 and 78, and then the first tick upon closure that is white will be the entry for the purposes of this demonstration. Positions will be exited, profit taking, when PMARP is below 20 percentile on closure. And then I included some optimization considerations here. Again, this is preference. I actually prefer the first one, but the first one I do find a lot of value in. Enter between the actual official signal and the current high, or like around the range highs. I will not do this in the testing. I'll maybe point to it as to why that would be useful, but that'll obviously increase your profits if you do that. Of course, there will be situations, however, where you have winning trades, but you won't have, a full position because your upper limit orders did not get hit. You could also have a consideration that you only take the trade if funding is positive. You could also make the PMARP take profit levels to like 15 instead of 20. Again, you'll probably risk a little bit of your hit rate, but you'll have a little bit of a higher profit as well. So these are all personal preference type things. No right or wrong answer, just what you actually prefer. So here's the results for the first 50 tests that I did. Again, started yesterday, and this essentially covered less than 2 weeks of price action for 50 iterations here. The data that I'm most interested in is the win and loss category, so the hit rate. Then I'm interested in the time for the wins versus the time for the losses, and then the win percentage on average versus the loss percentage on average. So we're just gonna scroll down to these. I have them already down here. 39 out of 50 were winners, or 78%. The average time in the winning trades was almost 45 minutes versus the average time in the losing trades was 75.5 minutes. In terms of average P&L percentage on the gainers, on the winners, was 0.26. And this is the standard deviation, first standard deviation, min max. Yes, you get the idea. And then here's the losing category. So actually has slightly bigger returns for the winners on a pretty high win rate. And yeah, thought that was pretty damn good. So we're going to do a few more ourselves here. So I'm just going to get rid of these for right now because I want to, well, I just think it'd be better if we redo them with the current price action. All right, sweet. So this was all this stuff that we've seen between like the last 12 days. So what I've done here is as I've scrolled back, unfortunately TradingView does not let you scroll too far back on a 5 minute. So I've just picked I'll just go to like early October actually. That's when things actually were starting to be a little bit more interesting perhaps. We can go somewhere over here. And now we'll enter in, I don't know, maybe 10 to 15 more. We'll see what time allows for. I don't want to make this video too long and too annoying, but basically, first things first, how do we actually set up the charts? So you need 3 indicators. One, the PMARP. In that case, go to the Indicators and Strategies tab, type in PMARP. It's the one by the caretaker. There we go. Alrighty, lovely. That'll bring up this right here. For the settings, it should be default, but the ones that you're interested in are PMARP right here. Boom, 20, VWMA, 350 look back. Okay, that's it. All right, moving on. We use the Lux algo for defining range highs and range lows. You can also just do it yourself if you already know how. Completely fine. The primary thing though is that you are consistent with whatever you do. So for the purposes of back testing, I want to standardize things, so I'll just use this. So it's this one right here. Type in Lux algo, supporting resistance levels with breaks. Almost 13,000 likes at the time of this recording. Looks like he has some paid stuff as well, which is probably pretty cool. I should probably reach out to him about that. That'll bring up this indicator. The red lines are the range highs. The blue lines are the range lows. I'd say 95% of the time, maybe even more, it's right. It's pretty fucking good, honestly, especially for a free indicator. Like, it's amazing. And then the Jewel Light, again, that's available via the Krown trading application, which there is a link in the description below. It's $30 a month, or you can get the full-on Jewel, but one of the two will actually be completely fine for this demonstration. Now, the big things here are, as I got this like damn sleep in my eyes from, I guess, sleeping. We want to mark off the take profit level on the PMARP. We'll use 20. And then on the Jewel Light, we'll mark off the areas that constitute an entry. So we want to see above 67, but below 78. So I've already put in my green bars right there. And we have an example right here. So it turns white. It closed at 75.6. Okay, we're in. So let's see where that is on price action. That's right here. So that's 18,936. So we'll go in over here. 18,936, boom. All right, where's our take profit? Well, it's right here. We'll get a closure below 20, and that is 18,830. Okay, 1.8. Not bad. Actually, this is $106 on this strategy is actually pretty damn good. I guess this time was like slightly more volatile. Of course, when Bitcoin's like trading at 30,000, 40,000, 50,000, these numbers are going to naturally be much bigger. Then I measure the time, 10 minutes, put that into the winners category because this is a win. Boom, there we go. Lovely. Let's move on to the next one. So let's zero in back here. We have another example right here. Boom. All right. This one would be a great example as to why averaging the entry between the official one and the range highs in this case right here would be better. So in this case, we're going to go with like the worst case scenario in this case. So 18718 is going to be the entry. Alrighty, and let's go back into it. We get our exit like very soon after that, right here at 18637. 18637. I already saw that was 2 bars, so that's 10 minutes. So we can just put that in there easily. Yep, 1, 2, 10. All right. Again, range highs just coming in from these red bars here. It's completely fine to have a wick into those regions. It's not okay to close above those regions. All right, moving on. Let's see what the next one is. Okay, this one's above. Nope, no entry, no entry, no entry, no entry. Entry. Boom. Okay, so we get an entry here, 19152. I should also denote that this strategy, it's not going to be a trend trader. It's going to be a short-term scalper. That's all we're looking for. Then we get our exit right here, 19053. Okay, this is actually doing much better than in terms of like actual numbers than what I was seeing before, but that's because volatility has decreased since this time. 1 hour and 40 minutes, that's 100 minutes. So we'll do this, get rid of that. It's not a loss. Okay, pretty good. Let's continue on. We have another one right here. Okay, there's your white closure, boom. So we enter here in 19060. Okay, take profit. Now in this case, it gets really, really close right here. Could you have taken profit on your own? Absolutely. Should you have on your own? 100%. But for the purposes of this demonstration, I won't do that actually. I won't do that because the data needs to be clear and consistent. So again, and also intra-candle, you would have seen the PMARP go below 20. So, you know, I probably should mark this one off as a win, but I'm not going to. Again, I want to present the data in the least positive way. Range highs are right here. We close above on this candle right here, 19136. I'm going to record this as a loss. Okay. Alrighty. So what's our time on this trade? Go from here to here. 3 hours, 25 minutes. So that's 180, 205. Okay. Put that in the losers category. So even there with the loss, numbers are a little bit smaller than the gainers on average, which is a good sign. All right, but that's okay because we come into another opportunity right here soon afterwards. We get out of the losing trade to get into the winning trade, or another winning trade really is what it should have been. 19145 entry. Boom. Exit is going to be right here, 19107. Yeah, this is a lot more what the more recent data looks like, 38. Yeah, it's like not anything too sexy, unfortunately. But it's better than losing, of course, and it is a 5 minutes, so we can't expect massive riches from this. All right, so 55 minutes. Boom, boom. Lovely. Alrighty. On to the next one. Okay, we have another one right here. Just want to zero in this just to double check. Boom. Yep, it's there. And that is here, 19107. Again, another example where averaging your entries between the official one and the range highs, the prior red bar, is the right move. 19107. Okay. All right. Take profit happens soon after that right here, 19080. If you're wondering where I'm reading this from, it's just the top left-hand corner, those white numbers near the ByBit trading view Bitcoin ticker. So 19080, yes. Again, another smallie here. Just stacking up the pennies before the train runs us over. So this is another good example of like why averaging your entry here close to like 19140, even all the way up here towards 19160. It's like a humongous difference maker for this one. Your P&Ls are going to be close to 100 rather than 30, 40, 50. So this was 75 minutes. Okay. Let me just check how we are on time. 14 minutes. I will do a few more. Maybe we'll go up to 10, not full 15. Don't want to bore you with the full details of this. And then we have another example here. Boom, 19090 entry. Again, another example where entering closer to the actual highs would have been better. And in this one, you can see that I'll actually take the loss here. Again, if you know how to do range highs yourself, you'll know very obviously that these are more accurately your range highs. Here, you would have stayed in the trade and you would have actually gotten a pretty damn big winner for this time frame, 18,963 exit. So it would have been closer to like a $200 winner. I won't do that for this one. Again, the data needs to be consistent. Very, 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 very important. So I'm going to take the loss right here, 19,133. And the reason why I do this is because I want to know the worst case scenario. I'm not looking to paint the data in a better light than what it actually is, because, you know, these are strategies that I actually fucking use. And there's no value in presenting a strategy to yourself that's better for yourself just to make your ego feel better. And also, you know, if you were looking to automate this with these particular indicators here, then obviously that's going to be more relevant as well. But fear not, there is an entry right here, right after that, 19,103. Okay, whoops, 19,103, there we go. And we get the exit that we were looking for before, right here, 18,963. 18,963. So we give up a little bit to gain some more. And that's what trading is all about. Again, 5, 10, okay, it's just 2 closures, so that's 10 minutes. Nice and simple. All right, let's do another couple ones here. We'll do 10 full ones, and then I will turn it over to you. We'll look at the results again. We'll recalculate them, actually. Get another example right here. Boom. And we actually get our exit right here. So a very small winner, but our entry is 18,934 and a half. Okay, exit is 18,919. All right, very small gain. Again, would have been better to enter, you know, to average that a little bit higher. Even just right around here would have been significantly better, but need to be consistent. Okay, 1 hour. All right, 60 minutes. Nice and simple. There we go. And the last one. Okay, do we have another example right here? We do. We do, and it's going to be a loser. Well, again, another example where if you were watching these intra-candle, you would have seen right here, you know, you're below 20 intra-candle, but that's fine. We'll take the loss. Again, consistency is key. So 18,953, 18,953, boom. Okay. And then we close above the range highs right here, 19,027. Looks like a big candle, but really isn't that much. Actually, fucking 5 minute really distorts your perception. So cool, there we go. So that would be 75. 75 right here. Okay. Loss and loss. All right. So there we go. So as you can see, the update. Oh wait, hold on. This is not updated. So let's go to 207. Okay, there we go. So the updated P&L actually ticked up 0.1, and the losing side, I don't know, was it the same or was it one less? Well, whatever, it's 0.25 now. Let me actually just do, what, no? Okay, it was 0.23 before, so it actually went up 0.2. Again, it's because that area would have been a little bit more, what's it called? Volatile in comparison to our current times. So in this case, we racked up another 7 wins out of 10 trades. So that would be a 70% win rate. Obviously, you know, with only 10 trades, it's not really too much. Like we could have had another easy winner right there, which probably would have been more in alignment with the data, closer to 80%, but anywhere between 70 to 80% is completely fine when we have a higher win rate like this, coupled with these stats over here. So again, this strategy is reliant on a high win rate. The numbers are relatively small. The trades come very fast, so fees are going to be an issue. So whatever way that you can use to lower that is going to be a massive win. Obviously, using limit orders or having some sort of a setup like I have with ByBit where they allow for 0% on maker fees is going to be huge. Also, you know, if you are a full-time trader, I believe, and you should check this with a tax professional 100%, But I am counseled that that would be an expense, your actual trading fees. But yeah, that's going to do it for this video. Again, just a nice and quick and easy insight into how I actually trade myself. I like to do this in a quantitative way because, well, personally speaking, I just find that better to actually verify and validate, what constitutes a signal, what constitutes an exit, risk management, all these sort of things, rather than a discretionary style. As far as rest of it goes, you can actually straight up just trade off of the quant data over here. In fact, that's what I personally do. So I more often than not do not wait for the PMARP levels to hit. I'm looking for the averages to get hit over here, around the averages somewhere, at least in the first standard deviation. So that's typically how I do it myself. Anyways, that's a good place to be leaving off on this particular video. I hope that this one does serve you well. I hope that this was in some way valuable, and I'll see you in the next one. Take care.